Powell says that there might be a chance of a recession. And if there is one, he says that he hopes that it will be a mild recession. So in today's video, we're going to take a look at everything that happened in today's meeting with Powell, the next steps for the market, and everything moving forward. We're going to take a look at the SPY, the NASDAQ, the IWM. There are huge ramifications for what's going on right now with the increase of the rates. And we're going to talk about how that's going to affect the market moving forward. All right, so without further ado, let's get started with the video. All right, so there's a few major things that Powell basically said. So number one, the Fed is now data dependent, meaning that essentially they're just going to wait for data to come to determine whether or not to increase rate or to pause rate hikes, right? Number two, June hike is unlikely, but he didn't say if the Fed is on pause. So that also caused a big downturn in the market when he basically said that. Three, Powell predicts slow growth, but not a recession. But he mentioned in the question and answer session that a recession is not out of the question. There still could be a recession. And if there is one, he hopes that it'll be a mild recession. So, he's just playing politics at this point. He's not blatantly saying that there isn't going to be a recession, which is another issue here. And number four, Congress needs to raise the debt ceiling. So he says that basically the central bank cannot insulate the U.S. economy from a federal default. And he said it was essential that Congress raises the national debt limit. So lawmakers essentially have until June 1st to raise the debt ceiling. And once they do that, it'll be very good for the banks, essentially. And this is going to help because the U.S. needs to essentially borrow more money to pay off the debts that they had, because currently the interest rates are much higher than the yield of the investments currently. So they need to increase the debt ceiling so that we could essentially pay off the debts that we have. So Powell is reiterating today that the Fed is not going to be able to protect the U.S. government or the economy essentially from a crisis that has to do with this. And then number five, he says that we need to do better on bank supervision. So, of course, obviously, as they continue to increase rates, and of course, as inflation continues to be an issue, we've seen that banks have been taking a hit. And the fact that we had a rate increase today, and also the fact that June can be unlikely. June, the hike is unlikely, but it still could happen. Both of those things are reasons why banks are, affected very, very, very negatively from this news. So, as we can see in the after hours, you can clearly see in the after hours how the IWM is taking a really big dive. It's taking a hit right now, actually, and it's the biggest loser in terms of the three indices. The Nasdaq is still holding up well, but the IWM is down in the after hours, and of course, obviously, also the SPY is also down in the after hours. But in terms of percentage, the IWM is taking a hit because of the negative news associated with the increased rate hike, associated with the potential rate hike in June as well. So yeah, that's basically that. Essentially, by June 1st, there needs to be an increase in the debt ceiling. And once there is an increase in the debt ceiling, then that would help propel, of course, I think that would really, really help propel and bounce the market up, at least in the short term. All right, so number one, holding puts overnight is probably going to be the best position for the situation at hand. And in terms of day trading, once again, we just took the overall momentum of what was going on immediately, and it was bearish, clearly. So all throughout today, we were just leaning short for our day trades in the early hours. So that worked out really, really well, obviously, and the market just continued showing a lot of weakness. And it was very, very easy. We just went short and played alongside the momentum. So it was pretty fun and simple and easy to trade today. We just learned from, obviously, simple mistakes and applied it to today, and it worked out really, really well. So yeah, that worked out perfectly. Sorry, just getting a phone call. Anyway, now is basically the time that the market needs to start making a decision. So we got news, right? So we got the debt ceiling needs to be increased by June 1st. We have that date. We got that increase of interest rate, and we got that the meeting in June may be paused, but there's also a possibility that the rate hike can continue into June. So this setup currently is clearly very bearish. There is absolutely no reason to be bullish. Something like this, I mean, if you're in futures, you basically already got stopped out. This already fell below this low of day here. It's just not something that I would want to go long, right? The immediate momentum of this move should continue lower, given the negative news and everything that basically happened during the meeting. So immediately this is setting up for a bigger move down. All right. And one of the other reasons why I think this can continue falling lower is not just the SPY, right? Not just the fact that the IWM is taking a huge hit and this candle on the IWM looks garbage, right? Not just the fact that the NASDAQ is also showing weakness. And of course, let's just quickly take a look at the rest of the tech stocks, right? So Apple is this is a clear cut weak sign out of Apple here. There could be another move downwards out of Apple. So I thought there was something wrong with my trading view, but Apple is indeed down almost 2.5% in the after hours. And something that they just released was that so first of all, Apple has earnings tomorrow, right? But Apple is expected to announce $90 billion in buybacks and dividends when it reports earnings. So, of course, currently right now, Apple looked very, very bearish, and it looks like it, played out to the downside. But the buyback news might not be helping because that investors could already be pricing that in. So I guess, we really just need to see how tomorrow after hours responds. But definitely heading into tomorrow, especially given the fact that Apple is down like this, and given the fact that the banks are going to be taking a huge hit at the moment, it's not a really, really great sign for bulls for tomorrow. Also, when you're taking a look at the KRE, which is the regional banking ETF for the SPY, it's down 5%, so that's not helping either. And so there's that. But let me just continue going over the tech stocks. So AMD obviously took a huge hit. Meta got a bit of a pullback today as well. Microsoft also got a bit of a pullback. Google, so Google was a bit stagnant, like towards the end. It wasn't like a huge drop. Amazon was similar, and but the main things was the chips, Apple, but then also Tesla. It held relatively well. It wasn't like a huge red day on Tesla, but this is a lack of strength regardless. So on all of these large tech stocks, the theme was that it was a lack of strength. There was no clear-cut propulsion to the upside. There was no proving that bearishness was wrong. Okay, so for example, when you look at Amazon, Google, or these two stocks specifically, right? There was no clear-cut sign that, okay, these are actually bullish. The rest of the stocks are bearish. Maybe the strength in these will help them. No, there's nothing like that at the moment. Everything is clearly just looks really bearish. And so there's that for the tech stocks. The other thing that I want to share was oil, right? So crude oil is taking a huge hit, and you can clearly see it's starting to get very overextended to the outside, to the downside in terms of the Bollinger Bands. And it's, if tomorrow can end up being a red day as well, that can start. So essentially, if we get a very, very big red day heading into tomorrow on crude oil, namely specifically on the XOP or XOM, for example, right? If we get a gap down in XOP, like a healthy gap down to close to 115, that would be a pretty good opportunity to go long for contracts 2 months out, in my opinion, with a 15% stop loss. Because then, essentially, as we fall down, right, what could end up happening, right, we could get the calls, we could bounce up, but then we could make another leg down. At that point, we would have a 15% stop loss. We would get stopped out of our position. That's fine. But once we make this next leg down, that would be a much safer opportunity to go long. But of course, like if we gap down tomorrow, regardless, a trade is a trade. You want to get your feet wet, especially with something that is very overextended to the downside like this. And we've missed the oil trades a few times, and don't really want to miss it this time. So let's see. Fingers crossed that crude oil and XOP, Exxon, they gap down even lower tomorrow. So you can see that Exxon is trading very far outside of the lower level of the Bollinger Bands. Obviously, it's not as perfect. You know, these bands only apply to large trillion-dollar companies and you know, ETFs, but it's a good sign so far. So I hope tomorrow we end up getting even more downside. And that is why, you know, we could get more downside in the rest of the market as well. And that is essentially what I am looking at. Last but not least, we have to take a look at the VIX. The VIX held this very important resistance at very important support, right, at $17. We basically held 1750. It was very, very important that we would hold 1750 and we close above it or continue to move to the upside. And we know that the VIX has an inverse relationship to the market. So if the VIX is going up, that means that the market is going down. Terrible error. The market is going down if the VIX is going up. So the VIX currently looks like it's bouncing, right? So if the VIX is going to be bouncing, that means that the market should be falling. And that is another thing that we needed to take a look at here. And yeah, now the issue is for the market immediately right now is that if you're shorting, you're only going to want to be shorting for something very short term, right? Because something like this, very drawn, essentially you would want to have shorted at levels of resistance, right? Especially, so essentially we could gap down, right? My thought process heading into the close, looking at everything, right? You're either doing one or two things. One, you're buying puts as close dated lottos that could end up bouncing overnight. Number two, you are buying puts for much further out to be a safe position. There's absolutely no reason to try to go long here, but it's a matter of, you know, how far we go down, or if we open up flat. If we open up flat, then the puts are still going to lose money. So yeah, I would not be buying calls here at all. We could, you know, if you like, we're expecting Apple to do well, that would be a time when you could play calls on the NASDAQ as a way to get sort of, if you want to play Apple earnings, right, it would be much safer to play the downside or the upside on the NASDAQ instead of playing Apple earnings straight away. Or you can play spreads, but that's another story. But regardless, a few things that I'm looking at are the VIX. The VIX is continuing to show strength above 1750, and you can see that it's you know, looking like it's about to continue go up, right? The other thing is that the SPY should be falling lower. Now it's just a matter of how much lower it could go. Below 406.50, then we are in very, very scary territory where we can easily tomorrow fall below 405 and 404 very easily tomorrow. So it's going to be very, very tough to try to play the long side. Honestly, it's going to be very, very tough to play the long side. The momentum is still bearish. The banks are taking a hit. Interest rates are, you know, we just increased the rates. And Apple is also going to be down a lot in the after hours apparently. So we have to see how that goes. But to play to the long side, we would have to wait for Apple earnings tomorrow. And until then, there's really, there's nothing else to look at immediately. If you're short overnight, that is the safest position to be in. If it's just not a good trade to try to go long off of this setup. So I hope you guys understand that. And yeah, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I will see you guys bright and early tomorrow morning. Thank you.